For more insight on Premier Li's speech and the economy, we're joined by current affairs commentator Einer Tangen, live for us in Beijing. Good to see you. This is quite a moment for China, because in years past there hasn't been this large delegation, although the issue of China comes up quite often in Davos. But this time around, a lot of people were listening very, very closely to the words that were being said. What did you think about the speech?
Philip, I think it was a very reassuring piece of business that was put forth by China. I mean, the whole point here was what was the reaction going to be to this 7.4 growth. I mean, Li has been pushing it off since the very beginning of the year and saying, look, 7.5 is a target. He was not concerned about going up and down a point, but what he was very concerned about were jobs, the growth of tertiary industry, and the growth of real wages, which has actually increased. Very moderate inflation has kept everything in pace. So he's actually quite reassured, and I think he's expressed exactly how China is going forward at this point, and I think it's going to be a great anchor factor for the rest of the world as they look into 2015.
Hey, Einer, one thing that kind of confuses me, and maybe you can help us here, is the fact that people try to explain this to me, but I don't know what the difference is between 7.3, 7.4, 7.5, or even 7 or 8%. Why is it such a big deal in terms of, when you think about the economy? Is it about the jobs?
Well, no, actually, even though they did not hit the target, they exceeded their jobs. The original was 10 billion. In terms of what you're talking about, is it's a $10 trillion US dollar equivalent economy. So 1% of that is, of course, very significant. But the issue here is, as was said earlier by the governor of the People's Bank of China, is that China is in a restructuring mode. They're trying to figure out how they can avoid a very sharp regression towards the mean, which has happened in other developing countries as they've come up against this, what I call the Norris point, where your cheap labor is able to overcome inefficiencies in manufacturing and energy use. You'll note that in his speech, he refers to the fact that China has increased its efficiency per unit of output, GDP output, quite significantly this year. And this is a very, very important thing as China goes forward and has to be competitive with the rest of the world's manufacturers.
A lot of people,
cheap labor in China.
Let me follow up on the reforms. A lot of people talk about the reforms that are needed.
Sure.
A lot of people talk about the reforms that are being in place already. And sometimes I wonder, do they need to take perhaps just a step back, to move 2 steps forward? I mean, basically, I'm trying to ask the question of whether or not slower growth is really better growth in terms of sustainability.
Well, I mean, you know, yes, it is actually, because what we're talking about here, as I was saying before, is a restructuring period. China is saying we're willing to sacrifice short-term in order to have something sustainable long-term. And that means restructuring their economy. You cannot continue to have high wages, wages going up at the same time that you have resource inefficiency. If you're using more dollars for energy than your competitors, over the long run, you will lose your efficiency in the market. So China is acting very, very aggressively to change this kind of scenario so that over the long run, they are competitive. This growth in the tertiary industries, these types of things are what they're really looking for.
A question about China. Givers versus takers. Traditionally, China has brought in a tremendous amount of investment. In other words, they're taking in investment. And over the last couple of years, they've been giving out investments. In fact, they've invested in the United States, Canada, energy fields, and also in Europe as well. And I'm just wondering, from your vantage point, which do you see more being promoted? More investment within China, or more investment going outside of China from China?
Well, I think the trend is going to be more investment going outside of China. I mean, there are great opportunities at this point during a world economic slowdown for Chinese companies to find partners with other companies in Europe, US, who have brands, distribution, and mature customer markets. If they can combine their lower cost manufacturing and climb the value trade, they can get away from the low margin OEM kind of economy that was been plaguing a lot of the potential future growth of China.
I mean, obviously Davos is happening in Europe, and there's been a lot of headlines from the ECB. There's one actually in Switzerland talking about the renminbi as well. And you see a little bit of chaos within Europe, and I'm just wondering, how does that ultimately impact China as a whole?
Well, actually, it's a negative impact. A stable Europe is a huge trading partner for China, and a stable Europe or growing Europe is very good. I mean, don't discount the growth of the U.S. in this. I know everyone's talking about Europe. Europe has structural issues. I mean, this lack of fiscal and monetary union is going to continue to be something that has to be addressed at one point or another, whether you're talking about Greece or whatever. There has to be, at some point, a resolution to this if, in fact, Europe is going to go forward. Now, there are competitive factors there. You were mentioning earlier that despite the weakening euro, there does not seem to be this corresponding pickup because it's at a slightly different area of the value chain. Right now, with the economics in malaise, there's not a lot of people buying new equipment. And you've seen that also in Japan, which announced that the high-tech equipment purchases were actually down in December. So across the board, there's this question about where are these different economies going, whether it's in Japan, China, US, or Europe. And China right now is able to go to Davos and speak confidently that they have a game plan, that they're managing it, and this is being very reassuring. In the other markets, it's not always so clear exactly how the government is going to achieve what they want to do. They just don't have the tools.
What a complicated start to the year so far. Einer, it's good to see you. Thank you very much for helping us better understand this situation.